Ingrid, tell me what you're seeing at the moment in the European luxury goods sector.
So we have seen a lot of M&A activity in the market recently. For example, the $2.5 billion acquisition of Aesop by L'Oréal, the Ribetti family sale of their stake in Moncler for $1.4 billion, and the acquisition by Kering of 30% of the Italian fashion label Valentino in a deal valued at 1.7 billion euros. Personal luxury goods such as watches and jewelry, but also cosmetics and fragrances, apparel and accessories remain highly attractive sectors for investors. Is that similar, Ian, to what you're seeing in the UK and US luxury goods market?
Yeah, it is. It's very similar. We've seen quite an increase actually in M&A activity in both jurisdictions in the past year. So, for example, Tapestry Inc. has agreed to purchase Capri Holdings in a deal worth, I think, $8.5 billion. And Guess Inc. has also recently announced plans to acquire the luxury brand Rag & Bone. Over in the US, we've also seen a takeover bid for Macy's department store, which is still playing out at the moment. And what's interesting about that is that as part of Macy's strategy to resist the takeover, they've recently announced plans to prioritize their luxury labels, Bloomingdale's and Bluemercury, whilst at the same time cutting back actually on some of their mainstream retail offerings. Ingrid, are you seeing much of a distinction at the moment between online and offline?
So customers of luxury expect a seamless omni-channel experience. It's really about the experience as such. We saw this during and immediately after COVID, when retailers moved into things like wearable technologies, augmented reality, and of course, the metaverse. In the luxury space, the distinction between online and offline is now much less relevant.
So what are the big opportunities in the sector going forwards?
I think customers as well as investors are expecting innovative technology. To have this will be a huge advantage. This includes utilizing generative AI to provide personalized shopping experiences and also using technology to improve supply chain efficiencies and costs.
I would agree with that. And I also think that sustainability is going to continue to be a factor for the luxury goods sector going forward. And we've already seen that actually in terms of the increased availability of pre-owned luxury goods for both for sale and for retail. And a recent example actually of that as well is the South Korean company Naver's acquisition of Poshmark, which is the secondhand marketplace for a deal tag of $1.2 billion. So it's definitely something that we're seeing much more in the market.
And the Asian and Middle Eastern markets generally are always going to be strong opportunities for the European and North American luxury brands. We have seen consumer demand return after a difficult year in 2023. So overall, the luxury market remains a positive and busy sector, and there is plenty going on.